What's up, guys? Welcome back to another episode of Rawstocks. This is Rustic, and today we're going to be taking a look at Tesla's chart. We're going to look at where price ended on Friday, where price came from last week, and where price is likely to head into this next week. With a data-heavy week, we are going to be looking for our manipulation on Tuesday, our distribution on Wednesday, our continuation or reversal on Thursday, and for Friday being a reset day again this week. Last week was a little bit slow moving as far as the distribution went. It was not a data driven week, so sometimes that distribution comes late, but we will be looking with CPI, PPI, and additional data coming out this week. We will be looking for those moves to again happen based on the quarterly theory, distribution coming on Wednesday and or Thursday. So if we look at what happened over last week, right? 2 weeks ago, we had our bottom, we had our smart money reversal, market maker buy model, headed up, double top, equal highs, came back down, optimal entry, caught distribution on Thursday. So last week, high came in 226 and some change, low came in 205 and some change. So we'll be looking at that weekly range as well. If distribution wants to come to the downside, we are going to be looking for 205.50 to break and see that continuation to the downside. Okay, if distribution comes to the upside, we're looking for the equal highs at 226 to break. See if that high breaks and if we can continue up in the upward direction. So what are our targets for next week if we are heading up or heading down? We got the 1 hour chart. I'm only going to do just the 1 hour chart today. I think that's just enough. I get a lot of feedback saying the videos are too long. People aren't wanting to sit through them, watch through all of them. And so I think, we'll try to condense it into, one or two time frames that will really give, a clearer direction and understanding of if price goes this way, where price is going to go. And there's not going to be a whole lot of repetition in the charts themselves. Okay, so if we're going to look at our objective targets, we need to look at both upside and downside moves. In the purple, they're just purple for, so that I can differentiate them from fair value gaps, liquidity pools, order blocks. Okay, so I did them in purple. But these on the 15-minute time frame, more obvious, these are consolidation ranges and zones that have been important so far. Okay, the other thing I want to note, we got some trend lines going from this low 2 weeks ago to Friday's low. Okay, we got a support line. We're in a symmetrical triangle off of the highs. I did not include, but I bet it would be just fine to include Monday's high. Okay, we could change that a little bit, capture the highs from Wednesday, and then we got our symmetrical triangle. Okay, so we will be watching for this to break out or break down. That will be an early indicator of the directional move. So if we closed here on Friday, we start to break out on Monday, we might catch a little bit further to the upside. We have this additional resistance line that comes off of this low here back in September, and this high mid-October. Where we have found that has acted as resistance, not quite getting up to it this week and last week. Right, so we are also looking at this longer term from the low here to the low at the end of October. We are looking at that support level as well as far as our trends go. So have that on your chart also. So we're in a symmetrical triangle inside a larger symmetrical triangle, which is inside an even larger symmetrical triangle if you look at that right there. So lots of different support and resistance trends going on. We're going to see which one gives and breaks first. So our earliest indication of a breakout or a breakdown is going to be that smaller, more recent symmetrical triangle. Okay, we are inside a consolidation range, and I'll show you that on the 15-minute chart. But we're inside a consolidation range. Okay, we came up, we tested this in consolidation range, came back down and tested this one, came back and tested this one, came back, broke down, tested a below consolidation range, and now came back up and tested this consolidation range, currently closed on Friday inside of that. So kind of playing these ranges can be safe, right? while we're in this symmetrical triangle. And then if we get a breakout, we're looking for this consolidation range. If we get a breakdown, looking for this consolidation range. Break above that, we have some levels up here. We have a volume imbalance right here that's in between these wicks where price has not delivered into that point that came from a gap. We also have the full-on gap from candle body close to candle body open between here. So 2 points of interest there, as well as buy-side liquidity that rests in the wicks here. We got the equal highs here. Okay, so objective targets to the upside. Those are our levels. Those levels come in at 224 being the first level of buy-side, 226.31 being equal highs. Okay, 230.58 being the opening of the price imbalance or the volume imbalance in between here, this volume gap. Also 234.48 being the previous low from back in September. And then we have the gap close up here at 242. So those are our upside levels. We also have a small imbalance here marked off in red, 220.80 to 222.03. That came during a day, a daily gap. We also have downside levels being sell side liquidity at 202.62. And then we have one that's not marked off on our chart from Friday, but that would be the low of Friday. And that's going to be previous day low. Okay, and then again, we have our ranges. So if we start heading down, we break this symmetrical triangle. We're targeting previous low at 205.69. Then we're targeting 202.64. Then we're targeting the support level here. And depending on how quickly price takes to get there, that would cause us to have a price variation of anywhere from $2 to $3. Also, again, if we head up, we're breaking this. We got our imbalance. We got our buy-side liquidity. And we have our next trend line of resistance. It's going to be in the 224-ish range, depending on how long it takes to get there. Okay. The only other thing I want to note is that from this low to this high to this retracement was perfectly 61.8%. That would be a golden zone entry. So that's probably why we saw a rally. Retail probably saw that and then rallied up off that golden zone. I want to look at where we are as far as smart money concepts go in terms of market maker buy or sell model. So right here, down here, we had distribution come to an end. We had consolidation. We had a run on stops. We traded up. We broke structure. We traded down. We had an intermediate term high. We rallied up. This was a market maker buy model right here. We got back to the top. We consolidated. We ran stops. Came down. We broke structure. We traded back up. We saw an optimal trade entry fib level here. We caught our distribution. Okay, so market maker sell model from market maker buy to market maker sell. Trading down, bounced up. Probably going to have one final legged distribution to the downside. That's just my thoughts. I want to give you guys a couple different scenarios here. Let's drop down into the 15-minute chart just so things are a little bit more clear. Okay, and so what I'm looking for this week, and again, Monday I'm looking for, two things. I want to note from this high to this low, we nearly got back to equilibrium. So we say Friday is a reset day. Although we had a nice move on Friday, we came back down to the weekly range equilibrium, got pretty close, didn't quite close at, but close enough that I'd say that was a very nice example of a quarterly theory, Friday being reset day. Okay, and so as far as next week goes, let's go ahead and look at, again, what our potentials are. So, so far overnight, the futures market is trading down. And so we'll see if we get our gap down open. Let's just say we do. Right. I'm anticipating we're going to probably see maybe some consolidation in here on Monday. And then on Tuesday is where we're looking for the manipulation. So want to be very mindful that on Tuesday, if we catch a move, we could catch something that looked like a false break on Tuesday. And I want to paint this in both directions. Okay. I want to paint this as a potential breakout or breakdown. So if we caught that breakout or breakdown of the symmetrical triangle or whatever. It could be taking a low, taking a high. If we catch that breakout or breakdown, we're looking for that manipulation to occur. So if it came out in the form of a breakdown, I'd then be looking for further distribution to the downside, right? And if that move came as a manipulation breakdown, I'd be looking at distribution to start to occur to the upside. And so we'll be watching for both of those things. But on Monday, the main thing I'm paying attention to is where the accumulation is happening, because smart money is accumulating their positions for the move that's going to happen, the next leg of distribution that's going to happen. So watching to see if Monday's a tight range or a wide range day. Again, I think we're going to see probably a more narrow range because we have data coming out on Tuesday and Wednesday and Thursday, all pre-market. And so I do think we're going to have a tighter range on Monday. So you might be able to just play the chop back and forth. But you never know. Maybe we do get a nice, leg down on Monday, that takes these stops out. So we'll just have to wait and see what happens. But again, looking for a continuation move. Two different scenarios that I want to point out. Low to high here is that if we come down and we close daily candles on the 203.68, which is a fib level, a daily close on that would potentially tell me that this whole thing is a reversal and that we're going to then see move to the upside. Now, if we take that low out, take that fib level out, and start closing daily candles below that, I do think we are going to see a move that puts us down to like 190, at least down to steal these stops at 194 and take that liquidity, and then see if this trend line continues to offer support for a bounce in the upward direction. But I do really think we still have one last move of distribution. Might take a week, might take 2 weeks. I bet we see it this week, though. If that wants to play out, that we see 193.89 taken maybe Wednesday, Thursday. So those are some things to be watching out for. I hope this has been helpful. I look forward to seeing you guys on the next one. Don't forget to smash a like, subscribe, check out the description. There's some different links in there, some different things going on. So appreciate all you guys' support. Hope you had a good weekend, and we'll see you on the trading.